Because of the rating downgrades and all, foreign currency borrowings of the commercial banks have decreased drastically. However good a bank is, when a foreign banker lends, they look at the rating of the country also.
Is a challenging juggling act in the best of times. And during an economic crisis, when many of a bank's stakeholders are reeling from the shock, it takes extraordinary strength to align them. People's Bank is the second largest commercial bank in terms of its balance sheet size in Sri Lanka, and Clive Fonseka has just taken over as its chief executive. He's here in the studio with us. Clive, this is a tough time to be managing a balance sheet of a bank, leave alone a balance sheet that is the second largest in Sri Lanka. When you became CEO, there must have been several challenges in front of you that you'd have to potentially prioritize. Okay, these are the three big things that I need to make sure we are on top of. Look at those challenges. What are they right now in front of you?
Actually, there are several. First thing would be to maintain the profitability, because as we know, interest rates had been at elevated levels from around April last year.
Sure.
So if you look at our funding, if you look at deposits, 95% of the deposits of any bank would be 1 year and less. So because of this interest rate differential, there is a huge impact to the P&L. So in such a situation, maintaining profitability is one of the challenges. Now,
if you explain that by that you mean your cost of deposits is rising, whereas your lending costs
remains as it is.
Remains as it is.
Because in most of the lendings, I'm talking about the retail, and except for some corporates where it's based on AWPLR. So these are generally 4-year, 5-year tenor facilities where it's given at around average rate would be around 10 to 12%.
Sure.
So although banks have because as per legally we have the right to increase it, but we have not done that due to various reasons. Obviously, we know that customers also may find it difficult because of this cost of living and the tax implications. So because of that, there's an impact to the bank's P&L. That is number one. Number two would be to maintain the liquidity, especially because of the rating downgrades and all. The foreign currency borrowings of the commercial banks have decreased drastically. However good a bank is, when a foreign banker lends, they look at the rating of the country also.
Sure.
If they are unable to lend, so we have been paying a lot of foreign currency debt, repaying. Unfortunately, we have not been able to refinance that. That is in foreign currency. Then, rupee liquidity also same, this sort of, when the interest rates are at a high like this, some of the companies and, even retail individuals, they have been seeking moratoriums, and, because of that, the cash flows had been less compared to what it was. So that impacts the rupee liquidity also. Unfortunately, still we haven't seen much of a depth in the interbank foreign exchange market. So you need to manage internally. The inflows what you get from exports and remittances, you need to manage the imports and the FX outflows for a bank like us when we do substantial amounts of oil imports, coal, fertilizer, and then pharmaceuticals. That's a challenge for us.
You must be also keeping a sharp eye on the health of the book in general. Has that been? I'm sure that must have been challenging.
Yes, because as I said earlier, companies also, we understand, because they are also sometimes for legitimate reasons, they are also finding it difficult. So, as much as possible, we've given them reschedulements and, we've given them some sort of moratoriums. So that is being closely looked at.
Right. How do you sort of build a strategy that can address several of these challenges that you're talking about, Clive? So if you go from the top, you have to maintain profitability in the bank, otherwise it'll erode your capital. You have to maintain liquidity both in the rupee side of the balance sheet and also the foreign currency side of the balance sheet. And you have this fairly challenging environment in Sri Lanka, leading to more delinquencies or people finding it difficult to service their debt. So, these are the challenges that you're facing. How do you build a strategy towards addressing these?
what we're trying to do is, if I'm to talk about the, lending, obviously it's very clear that, although the interest rates have increased by around roughly 20% from April last year, we will become compelled to increase, our lending rates by around at least by 3 to 4%. I would say that will have to happen. So then, even then that we will provide them some sort of we can increase the tenor of the facility so that the EMI, the amount that they have to pay monthly is the same. So we can give some sort of relief measures like that. So those are being looked into. So then on the other hand, obviously there's a lot of resistance for this. You need to have a strong bank, it has to be profitable. Otherwise, if it's loss making, there could be a loss of confidence among the depositors, and that could have an adverse impact on the bank, for any bank for that matter.
So if those are some of the big challenges, I'm sure you would maybe include also the debt restructuring, both Sri Lanka's domestic debt and its external debt, or the foreign currency debt that Sri Lanka has, needs to be restructured. Again, take a broader view and first tell us what are the likely impacts of this on People's Bank and its balance sheet.
First, I'll talk about the external debt restructuring. Sure. See, People's Bank is, one of the banks which will be least affected, because our exposure to SLDBs and international sovereign bonds is, very much minimal compared to even a small scale banks. It's less than, its face value is only about $49 million. Even that also cost is $40 million. We have bought from secondary market. There are some other local banks who have significantly higher exposure. So, even that we have already, provided 35 cents per dollar. So, that provisioning has been, impairments and the provisioning has been made already. And among the major banks will be least affected by way of external debt restructuring. But on the other hand, domestic debt restructuring, as a leading bank, we have a substantial treasury bills and a treasury bonds portfolio. We'll be impacted by that. We have made representations, we have done several scenario analysis, and all those, data has been given to the authorities. So, unfortunately, we haven't seen, as we do not know which way the discussions are going. So we are not in a position to tell, the impact of a DDR as of now.
Sure. So you told us that you have provided, or you provisioned 35 cents for every dollar for these foreign currency international sovereign bonds that you have in your balance sheet. Other banks have also done provisions more or less the same. How are banks, People's Bank and the banking sector in general, approaching provisioning for the risks they face in the domestic debt?
See, there are discussions going on. As of now, as per my knowledge, nobody has kept any sort of, kept any provisioning for treasury bills and treasury bonds.
At this point, Mr. Fonseka, we've heard intimations. It's not very substantially put, but it's been suggested that there could be an extension of maturities on the domestic debt, particularly I think the treasury bonds we are talking about. How do you think the industry, the financial sector and the banking industry will react to restructuring that is limited to extension of maturities?
Obviously, that will be far better than a haircut.
Right. So, by haircut, you mean cut on either the capital outstanding or the interest coupons?
Yes. Right. Yeah. There will be an impact, but ultimately what matters is we need to compare the both. So I think as it is, extension of the tenor would be better off than a haircut. That is my view.
I'm just wondering as to the cost of this debt that you're holding, because you would have subscribed to this at particularly the bonds, the long bonds. What sort of rates they were subscribed to at, and what is the likely impact of that?
We have basically whatever bonds that in our portfolio, majority of them are booked to the amortized cost. Right. So we did not have to resort to, People's Bank did not have to resort to transfer of portfolios from fair value through trading or fair value through OCI to the amortized cost when the interest rates went up in April. Because that's because People's Bank identified the interest rate structure and the bonds were booked properly. So I mean, because of that, there will, there's no impact, there's no hidden skeletons in our clauses because, I mean, our balance sheet is, clear in that sense,
Sure.
otherwise, we have to provide, the mark to market impact for these transfers. That would have been quite, significant to People's Bank. So we did not have to resort to that.
Let's talk about, Clive, the likely challenges that will come from some of your lending to state-controlled enterprises. You have a fair exposure, I think, to two big state enterprises, that is the Ceylon Petroleum Corporation and the CEB. There were some announcements in the budget, I think, and subsequent statements also made with regard to the CPC outstanding, the amount of money that CPC owes you for borrowing. How does it stand right now? What do you know about this?
See, there was a budget proposal to transfer CPC's dollar debts outstanding as of 31st of December 2022 to the General Treasury.
Sure.
So we were informed regarding this recently. And
what is that quantum, if you can tell us? Roughly?
Roughly about $2.4 billion.
Billion
for both state banks.
Right. Okay.
So we were informed regarding this. So we were told that this transfer process is ongoing. So
Sure.
hopefully within a week or two, it will get. We will know there'll be some clarity for this. So then onwards, the data will change from CPC to the Ministry of Finance.
So this is an asset in your books, right? $2.4 billion.
No, that's for both state banks.
Both state banks, yes. $2.4 billion assets in both state banks. So if you give this away, what do you do with that? What do you get in return? Do you get anything in return?
That's what I said. This is being negotiated. So ideally, this is a dollar asset for People's Bank. So we've given a feedback to the Ministry of Finance. So I think they're also having discussions, as to come to amicable settlement between two state banks and the Ministry of Finance.
Sure. What would be the options? Are you able to talk about that?
See, the best situation would be to take this in the dollar form itself.
Sure.
And otherwise, because so then as CPC had been doing during the recent past, to progressively reduce this dollar exposure into Sri Lankan rupees, because ultimately it will be beneficial to the Ministry of Finance also, because ultimately they'll be having the rupees. That's what they'll get. The budgetary allocations will be in Sri Lankan rupees. I think as I said, discussions are ongoing.
Right. This economic crisis, like you suggested, has been tough for your customers too. You've got customers, I suppose, all around the country from large
14.5 million customers.
So you have individual account holders who have taken small mortgages and loans, and small businesses, right? You must have met these customers. You must know some of these customers, I suppose. What's it like currently having to navigate this situation, trying to protect the bank's profitability and balance sheet liquidity while also overlooking the interests of customers?
Basically, everybody is, if the loan installment is increasing, you can expect, everybody is resisting that. But, we've told a lot of them, from around April to right now, the treasury bill yields have gone up by nearly 20%.
Sure.
Okay. Then on the other hand, most of our, the retail loans have been provided to, substantial lot had been provided to the government sector employees. They have received during the past year alone about 25 to 30,000 COLA increase. So we have done some calculations. If about a 3 to 4% increase in the facility would amount to about 3,000-4,000 rupees per month. So
COLA meaning cost of
living allowance for these government sector employees. So we've told them. Then on the other hand, so we've even told them, given them options if they require to extend the tenor so that their monthly installment is the same. So some of them, I think majority of them have understood that. So they also realize, because if they come with a 500,000, 1 million deposit, any bank will pay 20%. So in such a situation, to lend around 10-11% is not easy. So first of all, we need to take some measures to break even, or otherwise ideal to have an interest rate margin, so that it will be a profitable venture.
When you're extending tenures of loans, whether to individual customers or other businesses, there's a loan covenant, is it a straightforward thing to do, or is it a complicated exercise?
As per the loan agreements, bank has the right, because that has been imposed in the loan agreement that was signed. So we've gone through that. We received legal opinion for that effect.
You talked about the need to continue to be profitable despite this crisis. I suppose one reason is banks are required to have a minimum amount of capital to back the risks they take. This is a market where it's now quite costly to raise new capital. How are you placed with capital currently, particularly given what you understand will happen with your balance sheet? And what's the broad strategy with capital?
See, as of now, among the leading banks, People's Bank has the highest capital ratio. As of September, we had the highest. I'm talking about these 5-6 major banks in Sri Lanka.
Sure.
I think People's Bank, when the interest rates were low in 2017 and 18, we've raised about 35 billion subordinated debt, where for this we did 10 billion tranche and another 20 billion tranche, where the average cost of funds is about 11%. Then there's another 5 billion perpetual bond. So I think People's Bank had come at the correct time, because as a result, there will, as per our projections, there's no need go for a capital raising exercise, at least for the first half or the third quarter of this year. So hopefully, the expectation of the government and the central bank is also so that by around the second half interest rates will decrease. So then, depending on the requirements, there's no need for us to go and bottom line is to go and raise when the subordinated debt 5 years 80 around 28-30% right now.
You must also be looking at what are the scenarios likely to unfold and how they will impact your balance sheet. And a couple of those incidents that can happen is the domestic debt restructuring and its impact on the balance sheet. And also, if loans and advances, the health of those continue to deteriorate. What do you think will broadly happen in the sector? Let's talk about the sector with these two in the next 1 year or so.
Probably we will see an increased NPs, and there'll be some transfers to the stage 3 in I would say this year. So I think that will be the case for almost all the banks, because we know good corporates, they are finding it difficult. They have some liquidity issues. So this year I think that can be expected. We discussed how difficult potentially this time is for also your customers. You have 14 million customers. Many of them have been with you for several decades, right? I think you have the biggest customer base in Sri Lanka at 14 million. So like almost 60% of Sri Lanka's population is a customer of People's Bank, at least an account holder. How do you, at this point, at a time like this, how do you balance these competing interests? You have to have liquidity and profitability on one side, customers on the other side, and then you have a owner who is the government, who has also certain interests. It cannot be easy, I'm sure, right? But you have these three big stakeholders. How do you balance these? See, our priority would be to manage the liquidity and the profitability. That I would say number one.
Sure.
This is key right now. Number two would be, the customers. As much as possible. Basically service that we provide to the country, because even right now, most of this oil, coal, fertilizer, pharmaceutical imports, people are facilitated through People's Bank. So that will happen, because even last year alone, we opened $2 billion of LCs for. We provided funding for CPC, $2 billion. So that will continue, because we are expected to do that.
Sure.
Finally, our owner, which is the Ministry of Finance, we tell them there is a constant dialogue. The situation is brought to their notice, and those discussions are ongoing.
So thank you. That was an awesome conversation. Really appreciate you spending some of your time with us.
Most welcome. Thank you. It was a pleasure.